Hi, everybody. We're just going to give it 1 or 2 more minutes for a few people to join. Hi, welcome to the new people that just joined. We're just going to give it 1 more minute for more people to join, and then we'll get started. So a few more people have joined. Hello, welcome. All right, I think we can get started. Welcome, everybody, to our webinar discussing the future approach to financial consolidation. Today, I am Shanna Jordan from Insight Consulting. For those of you that don't know Insight, we are a data company where we partner with our customers across the full data value chain, from data strategy to data integration, analytics to planning and forecasting. I lead the planning and forecasting division of our business, and within this space, we assist companies to digitize and automate their financial consolidation process. So today we have Neil Conrads, all the way from Germany, from corporate planning, that will be sharing some of his experience and insights on this topic. Niels.
Yeah, hi Shanna. Thanks for the introduction and thanks for inviting me for this to this webinar. And of course, I hope that we will give some meaningful insights on the topic of consolidation today. Yeah, maybe a couple of sentences towards my persona. So my name is Niels Conrads, as already mentioned. I'm head of pre-sales here at CP. I'm located close to Hamburg in the northern part of Germany. I have a financial background, of course, and I was working as a consultant for CP and other companies in the finance sector with focus on integrated business planning and consolidation for quite some years. Yeah, during my time as a consultant, I have helped many customers to introduce and implement consolidation software. And nowadays, in my role as a head of pre-sales, a big part of my job is to accompany the sales process of CP from a professional point of view, which of course grants me quite some insights on what prospects nowadays expect of a consolidation software and what their problems, needs, and wishes are. Yeah,
Good.
so far from my side.
Thank you, Niels. Great to have you here. So just in this session, it's designed as a thought leadership piece rather than a product-specific discussion. Our goal is to provide you with insights into the emerging trends, best practices, and innovation strategies that are shaping the future of financial consolidation. So on the agenda of today is what is financial consolidation and what is involved in it, the global challenges that we've identified in the space, and then Niels and I will go into a bit of a discussion around the trends that we've identified and in the industry and the landscape. And then we'll go into a Q&A session, but please feel free to put any questions you have in the chat and we'll get to them at the end. Thank you. So, what is financial consolidation? And the word consolidation simply means to put things together. And as we assume most of the people in this room will know what consolidation is, and we know that financial consolidation is a lot more complicated than just putting things together. And we're going to consider a very simple group. It's got to do with the parent companies and its subsidiaries, where you take calculations and adjustments, and you add them to create a unified set of statements. So in this very simple group, we've got the Alpha Group, and it owns a retail chain, a manufacturer, and the manufacturer and distributor owns a factory and a farm. Let's say that the farm sits in South Africa, and the manufacturer sits in Europe, and the Alpha Group head office sits in Mauritius, working in USD. As we can see that this is already a simple example, but can become quite complicated. Amongst each of these groups or each of these companies, there's management accounts and financial statements that would need to take place. And with that becomes different reporting standards like IFRS and GAAP, different tax laws and regulatory requirements. Then you would have your revenue reports for each of these companies, where they will consider and track their income and generated from sales and services. And with this, and as we consolidate up to the Alpha Group, they would need to consider intercompany transactions and balances in various currencies. Then we would get to your security, and this is very important, not only in the consolidation space, but each company would need its own level of security to prevent fraud and data breaches. This includes implementing access controls and ensuring that there is auditing trails and as well as data governance. So this can become more and more complicated as the Alpha Group grows or more companies are added. We then have to look at the ERPs and where the data sits for each of these companies and how it's going to be consolidated at the group level. And let's say that the farm does, or let's say the retail chain uses SAP or Oracle as an ERP, whereas the farm may not even have an ERP and things sit on a hard drive somewhere or in an Excel spreadsheet. So it can become a little bit more complicated to consolidate this and quite time consuming and tedious. And then the last thing we will consider for each of these groups is other operational functions. And this could include tracking liabilities, maybe assets, CapEx reporting, investments, or adjusting for minority interests or partial ownerships when it comes to consolidation. And the list goes on and on and on. And in this very simple example, we can see that the need for automation is quite clear. Because each point or each company adds its own set of complications. And so I want to take it one step further and say, now that the Alpha Group is established and the industries change and companies change, they consider buying another group. And the reason for this may be better technologies or retail that they would like to invest in. But in order to make sure that this is a wise decision, they would need to simulate this in their consolidation statements. They would need to do what-if analysis and scenario planning in order to make an informed decision if this is actually a viable decision. And I can maybe just pose a rhetorical question to the audience and say, is your company at a place to make these decisions for the future in your consolidation process? Now we look at the synergy between people, process, and technology in the face of global challenges. We know that people provide the expertise and the judgment needed to interpret this data accurately, so financial people. Then we look at the process and say, or the technology, and that enhances the efforts to automate these processes. And then the process is obviously ensuring consistency and compliance across the different financial activities. And within this space, in these three legs of the process, it's very important when we're looking at global challenges. And as I go through this list, I'm sure many of you would have be very familiar with these challenges. So the first one is too much time spent on collecting and validating numbers. If we look at the Alpha Group, there is various departments and subsidiaries and it's extremely time-consuming to validate and collect this data. Then we have human errors, and manual data entries are prone to human errors with spreadsheets and calculations breaking. Simple mistakes can lead to huge impacts within the business. Then using inappropriate tools and systems. Can your tools scale? Can they grow as the business acquires new companies, new groups? Large organizations need to automate these processes to make sure that they're using the appropriate tools for the future. Then there's manual adjustments for intercompany transactions. If the current process that you have does not flag for intercompany transactions or partner transactions, it gets very difficult to eliminate these processes or these transactions. We then have the forever changing reporting requirements within the financial industry, where your regulations, accounting standards, and the stakeholder expectations and management expectations or the board of directors to keep up with these changes manually becomes extremely challenging. And the risk of non-compliance for the future. Data manipulation and risk of fraud. Without controls and audit trails, it becomes difficult to detect fraudulent activities. So it's very important to have built-in controls in your systems to ensure data integrity and security. And then I think we have touched on this, the complications can arise between countries, regions, and currencies, and especially for multinational countries or companies, to make sure that you are using the appropriate tools to, this becomes an extremely complex task to try and consolidate across different regions, especially different languages, and making sure that everyone understands each other. That adds a whole level, another layer of complexity. We then have the lack of security in many systems, and I think we also touched on it a little bit prior, is that there is the way in for if you don't have proper systems that you can have extreme financial losses and reputational damage if you don't protect your data. And something simple like sending your reports over email can be extremely detrimental to your business. And then one of the last challenges that we've identified is limited scalability. As organizations grow, financial processes need to scale accordingly, and using outdated systems is just not, you're going to struggle to move forward. Niels, can you provide any further thoughts on these challenges?
Good question. To be honest, I think we could just talk about these challenges for hours. So I probably will just skip that one. Maybe one hint, especially with the lack of security or the data manipulation thing. So yeah, if you're doing your consolidation spreadsheet based, which is quite commonly still, you will probably, depending on your size or the size of the group, or depending on the complexity, at one point the spreadsheet will reach a point where it's just so complex and big that you might need some macros, some VBA scripts for just handling the template itself. And I think everybody of us knows that this is just like a huge risk, a huge security risk. It's an open gate for hackers. So you should, especially in a business context, you should basically never use macros or VBA scripts. But yeah, if you stick to spreadsheets and the complexity is so high, then you just do not have any other chance than doing so. So yeah, just to highlight this, I think huge security risks here.
Yes. Well, thanks for that, Niels. And There's also a poll in the chat. Everyone should be able to see it. If you can just tick what any challenges that you've faced in this space in your financial function. Perfect. That leads us over to the discussion. So Niels, my first question is, what are the current trends that you see in the market?
Yes, okay. Yeah, I think trends is a quite hard word, especially in context with consolidation, because consolidation is mostly not really driven by trends. So it's something, okay, that's something fancy I want to do. It's more about the outside changing. So for example, there's some new IFRS regulations that you have to adapt to, et cetera, et cetera. So most of the time you're rather driven than trendy in terms of consolidation. Yeah, but nevertheless, I think there are some topics that you could call more or less a trend. One thing, and I think that's a general point, is data governance and data availability. So this is not only like with regards to consolidation, but I think in today's world, data becomes or has already become a critical asset in basically every group. Doesn't matter whether you're in the tech sector or yeah, in the food supply sector or whatsoever. And thus, data governance also becomes more and more important, especially with regards to data protection. And there we are already in the topic of data protection laws, such as here in Europe, I think it's GDPR, or in the US, you've got this CCPA, so regulations regarding your data privacy. And yeah, the data flow and the data streams itself become an absolute priority everywhere because everything is dependent on that. And yeah, these data flows and streams enable you many processes, analyzes, or are key to functions that you would otherwise not be able to do. So yeah, of course, as always in today's world, data is a huge topic. Another thing that you can observe recently or during the last years is the frequency of the consolidation process. So yeah, back in the day, it was totally sufficient to just do a legal consolidation once a year to meet the government needs or how to call it. Yeah, but nowadays the world is changing faster and faster. Of course, due to the technological changes, but also if you just look at the last 5 years or so, we had COVID, which disrupted like the whole world. We have the war in Ukraine. We have changes in the global role distribution, which means that nothing that used to be granted is granted anymore. So yeah, everything can just change within days or weeks. And thus, of course, the information flow has to pace up. Yeah, meaning most groups nowadays are not relying on a yearly consolidation, but they are trying to get faster information. So going from a yearly consolidation to a quarterly, monthly, sometimes even a weekly consolidation, just to get the whole information quickly and thus enable quick adjustments and reactions. Yeah, quite connected to that topic is also the different types of consolidation. So again, we come from like a once a year legal consolidation. Now that is of course not enough, and also a monthly legal consolidation or fast close consolidation is not enough. But you might also want or need some forecast consolidations so that you have an idea what will happen in the near future. Yeah, this could be a forecast in a classic way, so just a 3+9, 6+6 or so. But more often nowadays, you also need to pace up that one, meaning that you might, or the trend goes to a monthly rolling forecast. And as we're already talking about forecasts, connected to that one, of course, is the budget consolidation. So this is also something that is often needed or desired, of course, not only by the internal stakeholders, but also the external ones like investors and banks tend to ask for such budget consolidations, often for a time span of up to 5 years or so, depending on your business model. Mm. And another type of consolidation is what you already mentioned in that example. That would be the scenario planning. So yeah, the scenario planning allows businesses to anticipate the impact of different strategic decisions and external factors on their financial health. And of course, because that can offer competitive advantages. Yeah, but I think you highlighted that one with the example earlier. Quite nice. Yeah, one point that one could really call a trend, to be honest, would be the matrix consolidation. So this one, I think, is a bit driven by SAP, so the software or ERP provider. And with their new system, S/4HANA, which with that technology, they give you the opportunity to look on your consolidated data via different dimensions. So, for example, check the consolidated data by regions, by product groups or product lines, by branches, etc. And these different views, of course, allow you some insightful views on yeah, your portfolio or whatever. And because of that, of course, then give you some very useful or very valuable insight for strategic decision making. And last but not least, I think we already mentioned that topic quite a couple of times, automation. So basically every prospect that I come across nowadays asks for automation because, as you can imagine, the points that I just highlighted, they are quite a huge workload. And if you stick to yeah, templates or spreadsheets and stick to manual work, it's just not feasible to yeah, do this workload in time. And thus you will need some kind of automation during the process.
No, thanks for that, Niels. Yeah, so just to summarize, a high level of data governance is very, very important, like we mentioned, not only in our in consolidation, but across the world, all, you know, data as data becomes more and more. So definitely that's a great trend. Yeah. And then the frequency of consolidation, that's quite interesting because yes, the yearly consolidation is the most that companies can do because of the processes that they use in order to get to this. So recently, we've also experienced a lot more companies wanting to go to that monthly consolidation in order to get better decisions out quicker from that level, the financial level. And then scenario planning, very interesting because AI being the buzzword in the industry, you know, everyone wants to do this predictive analytics and use an automation and all these things using you know, fancy things, but it comes down to your data and making sure that the processes and like we explained around the intercompany transactions, those flags in your data need to be there before you can even consider using AI for consolidation. Matrix consolidation is an interesting one for me in terms of dimensions, you know, consolidating at a product level, you know, eliminating intercompany transactions between products and between regions is also we've experienced that within businesses that might have healthcare and farms, for instance, you know, two different industries within a group. So yeah, thank you.
Nice point here with the AI. I mean, like we left that one out a bit. I think it might be a bit included into automation. Yeah, you already mentioned it more or less, I think, but just to highlight that one. I mean, like AI is not the solution for everything, as most of us probably know. And to train an algorithm for doing this work, you need data to train it on. And we're talking about like, I don't know, 3 years, 5 years of that's a lot of data. And this data, and that's something you might not forget when thinking about getting some AI help, let's say. You need very precise data there. So, and I think in our example, it would already not be possible because the farm, for example, does not have an ERP system. So you just have accumulated data, and that's already not enough for enough train or for a good training of the algorithm. That's at least my guess. So I think that's something you always have to keep in mind when talking about AI. It's just as good as you can train it. And
Yeah,
if you have bad data as a fundament, then the outcome will not be sufficient.
yeah, 100%. Exactly. So Niels, what is the business risk not to digitize and automate this process?
Another good question. Um, I don't think that you can really quantify the risk because yeah, it's of course highly dependent on the complexity and the size of your group for one instance, and it's so faceted that yeah, you basically can't quantify or measure it. So, for example, what I mentioned earlier, um, the point that you could basically lose like your whole technique in a whole group because of some hacker attack or something like that, because you were using spreadsheets with macros or something like that. I think that's a prime example. So yeah, I experienced something like that with one of my customers back in the day. And of course, the project was stopped, everything was stopped, and they were using pen and paper for logistics because they had nothing left. And this state was like it for months. So I think that's something you can't point out enough or stress enough. Um, yeah, but next to that, of course, there's always the risk to have unfulfilled needs of your group on an operational or a strategic level. So you just can't deliver certain things on time or at all. Maybe you're also like too slow to keep up with technological advancements, meaning you're getting out of touch at one point. Also, the nowadays economic pressure cannot be met. Of course, everything is quite costly. So in general, manual processes are very expensive. They're draining company resources. People have to do yeah, repetitive manual labor that yeah, drains the resource time in that case. And of course, this time could be spent way better or way more efficient. Um, yeah, manual labor or manual consolidation in that case always includes a huge error risk because like humans just tend to do errors, especially when you're doing repetitive work. Yeah, you meet inefficiencies. You have probably data inaccuracy. Like another example, jumping back to the farm, you've got some guys there just not working with finance, not working with numbers, and because yeah, why so ever, they took the wrong template, they took the wrong sheet, and they delivered maybe last year's figures. You already did your whole consolidation. You have to meet a deadline by the government, and yeah, one day before the deadline is there, you realize, oh, they were the wrong data. So you have to redo the whole process, which might take you weeks. So you can't meet the deadline. So you have to pay some fees or whatsoever. No?
Mm.
Also, with regards to banks, is something that can happen quite often. So of course, yeah, the error risk is quite high, which can lead again to customer dissatisfaction. So customers of the finance department, which would then be internal customers like the CEO, like the board of directors, but also external investors and shareholders. Yeah, if you deliver wrong data there or insufficient consolidations, you've got a problem, of course. But also looking on a strategic level, if you make slow strategic decisions or wrong strategic decisions because of the data, then in the end, also your real customers will not be satisfied because you do not meet your demands. You do not adapt to the market, for example.
Yeah, absolutely.
Yeah. And last but not least, maybe also scalability. I think you mentioned that one earlier. So if you're doing it manually, it will be a huge workload to get a new group or a couple of companies or even a single company in your spreadsheet model. Yeah, and this can have effects afterwards, of course.
Yes.
So yeah.
Oh, thanks, Niels, for that. Just with regards to higher costs and inefficiencies, what I've experienced is you've got really high-skilled financial individuals that are spending a lot of their time doing this process, the consolidation process, very manually. And even for them as an individual, not using the skills or the studies that they have gained, could give them, as an employee, dissatisfaction. So it's very important for companies to make sure that they are using and leveraging good software in order to use good people skills, and using skill in the right place. So it can become higher cost. So do you need to spend more money buying or acquiring more financial people, or do you just need to use your existing people in the right way? And I think that's
that is a huge point, I think. So like if you have a multinational group, you can have it either centralized or decentralized. So if you're decentralized, you will need some highly skilled people on the lowest level to get you the correct data to convert, I don't know, from local GAAP to IFRS and stuff like that, to do the currency exchanges, to prepare all the data that is needed, and then send it to your HQ. This would mean you've got a lot of highly skilled people all around the world. The other way would be you do it centralized, and then again, you need very high skilled people who know what to do with all the subsidiaries in the different countries with the different gaps and so on. So even if you centralize it, you will need a nice team, so a couple of people, and they all have to be more or less high skilled. And high skilled always means costly, normally at least. So it also just with regards to pure money, to pure costs, this is of course a topic, because if you have the technological fundament, if you have the correct software, then you can leave most of that stuff where you otherwise would need knowledge and skill, could be done by the software. And thus you are able to employ less skilled people than you would have before, meaning less skilled, less spent money. Huh?
Exactly. And also just leveraging the current staff that you have in the right way.
Yeah.
And
That's, of course, we're never talking about like getting rid of people and
yeah,
hiring cheaper labor. That's for sure.
exactly.
But as you said earlier, these highly skilled people should do work that is very meaningful and provides a positive outcome, and not just like dragging numbers around.
Yes, 100%. Great. And then just with competitive advantage, we need to just realize that there are other companies out there that are making good decisions and leveraging software and be able to do what if scenarios and automations. And there might be a company or a decision like building a plant or opening another branch, whatever it is, they are already making those decisions. And I'm just reminded of something I read the other day about AI won't replace you, and this goes to, let's say, automation. Automation won't replace you, but those that use automation will be replaced. And so it's very important for us as financial people to, also be software people, also know how to use automation to enhance the processes that
To adapt.
To adapt, exactly.
Yeah. It's same with controllers. And like I think we read like 50 years ago, you can read old papers where they say like the controlling will die out. It won't be needed anymore. Nowadays, you still have a controlling department. You still have controllers, but they're more going to the direction of this data scientists. So of course they are not just like calculating numbers, but they are looking for anomalies and doing other work than what controlling was used to be.
Exactly.
Same
Yes.
as here.
Thank you. And then, so what is the future of financial reporting in the contents of consolidation, in your opinion?
To be honest, basically the same. I mean, it has to be fast. So best case would be a real-time reporting. Also, the structures should be connected. So if anything changes in the whole consolidation flow, then of course the reporting should change in real time, more or less. So it's just like very work intensive. If you do some changes because of IFRS changes or just because some new accounts popped in, and then you have to redo all your reporting. You have to check every report whether the accounts are in there or not. So yes, everything should be connected and how to say it? So it should be one nice flow. Yeah, also you might need to integrate different data sources. So of course, we've got the financial accounting for the consolidation itself, but the reporting at the end is more than just that. So, for example, you need the headcounts, you need the FTEs or something like that. And this information might not come from the ERP system, but from some HR tool. So this should all, of course, be connected as well. So you have one single point of truth where you get everything out of. And the reporting, I mean, like, yeah, is one of the final goals of consolidation, but in the end, it should be just something that drops out. So if you're technically and practically done with your consolidation, the reporting should just be there and nothing that you have to do again on top of it. Yeah, and maybe, yeah, as the technology also changes, now we were just talking about like this static reporting, so a monthly report, a yearly report that you hand out. But nowadays we're moving more and more towards this BI tools, for example, like Click or Power BI. So dynamic tools for enhanced data visualization, where you can just drill in on every level and get the information that you need.
Yeah, I guess the financial reporting is the end result of your consolidation, and it should be streamlined. That's exactly where we want to get to the point where all the manual, automated, repetitive tasks are done, and they're able to just click a button and get their reporting real time, and at a group level, and and then you send that. That process shouldn't take long, and I think that's where a lot of companies are struggling or taking up a lot of time. Is this function is the financial reporting of your consolidation that needs to go to the board of directors and to legal and to shareholders, etc. So in an ideal world, you click a button and everything is done.
Yeah.
So
I think we're quite close to it, to be honest.
Yes. Leading to my last question is, what advice would you give businesses choosing software and implementation partners to move from manual processes in consolidation to automation?
Okay. Yeah. I think the first point would be to define the final target. So look at everything that could be there. So what we were talking about, huh? So monthly consolidation, a fast close, a legal yearly consolidation, forecasting, matrix consolidation, etc. So look at these topics and see what you will need for your business model. Totally, again, depending on the size of your group, on the business model and the complexity of your group. So then decide what you will need and define the targets to, yeah. But always, when doing so, keep in mind or try to keep it lean and easy. Because lean and easy means, in the end, again, like fast and cheap. There are many very powerful, like really powerful consolidation tools in the market, and they have a huge load of functionalities. And of course, depending on the business model, you might need these functionalities. This can always be the case, but you have to check for yourself and see whether you really need some functionality or not. Because the more complex and the bigger these solutions are, the harder they are to handle. So it might be that you've got a tool that is capable of doing everything, but it gives you no hint on how to do so. So again, you will need very highly skilled people, also skilled with that software to exactly know what to do. And of course, there are also other tools that maybe don't have all these functionalities, or maybe they do, but they give you more help with the tool itself. So they have dialogues, they guide you through, meaning a less skilled person can handle the tools and softwares without coding, without scripting, and maybe also only with not the deepest knowledge about consolidation itself, because everything is guided there. So this is something you should always, of course, have in mind. Yeah, also with regards to, I don't know yet now, legal forecast matrix consolidation, again, think about the simplicity and the costs. So every extra step means extra work, even though if it's automated, it will still be extra work. And you have to look at that extra work and compare it to the outcome. So, for example, to the matrix consolidation. If you have like a business model divided by regions or by countries, but it's like also divided by entities, then you can already have what you need, namely an overview over the different regions. But as it's cut by entities already, you don't have to do a matrix consolidation. So also the matrix consolidation needs a very precise fundament in the data, which you might not have. So just because it sounds fancy and you read somewhere that it's a good thing to have, which it is, for sure, does not necessarily mean that you have to go for it. So yeah, again, keep it simply and always have a look at the costs. And again, also with defining the target, already go for the automation process to see what can be automated and what not. Then you've got a clear target picture. And after that, then I would go for a phased approach. So define what steps are needed to, in the end, achieve your goal. Define what happens in these steps and don't overextend the steps. So for example, right now you've got a spreadsheet consolidation once a year, and maybe the first step would be half a year or a quarterly consolidation. And if that is done, then go for a budget consolidation. And when that is done, forecast and so on and so on. Don't do everything at once. Keep your target in mind, but focus on just the milestone that you want to reach now. Also, I mean, maybe or probably most of us already have heard the Scrum techniques and this agile approach. And I think, for example, in software development, that is a very, very promising way to go, but not really, in my opinion, in consolidation, because consolidation is quite structured and you don't need to be able to jump from one week to the other. And, oh, no, now we need a matrix consolidation, for example. So I don't think that this is the correct approach for a consolidation project, at least. So don't do everything at once. don't overextend or put too much pressure on the milestones, because it's always like that in a project. At one point, you will probably find some or many obstacles on the way. Another thing then would be that, have a look at the self-service capabilities. So choose a software that is user-friendly and empowers the employees in the field of consolidation. So what I already mentioned, which really helps and reminds you of things that you might have to do. Also, like the scenario, the what if analysis that you mentioned in the beginning, something like that should be easy doable in the software without external help. I don't know, like expert help, consulting help, whatsoever. So you should not have to do some coding or scripting there, but basically the normal day-to-day user of the software should be able to do such a scenario on his or herself. And the software, of course, should always have a single point of truth. So meaning that there are not different versions of, for example, a consolidation are flying through the group. And also with regards to the software, everything that can be automated should be automated. And maybe, and of course, in the last point would be the support. So of course, but I think that's self-explanatory. When choosing a software, go for a software that where you have like good partners that offer you comprehensive advisory and also like maybe robust after sales support, guidance, and so on. So to keep it short, if you need help, you have to be able to find this help, of course.
Yeah, absolutely. No,
Yeah.
thanks, Neil. So to summarize that, it's definitely set clear objectives, phased approach, step by step when you want to achieve and transition with minimal disruption to your process, because there's still deadlines to meet while you move into automation. And then definitely self-service capabilities. That's quite interesting, as I think there are a lot of softwares, like you've mentioned, out there that are great, but require coding and people with like development like degrees and things. And sometimes financial people just want to be able to say click, click, click and get the answers that they need. And then partnering with a provider that provides support. This is a big one, as a lot of software is great. And I always say that software is only as good as the people that implement it. Because if you don't have training and you don't have adoption of the software that you're using, then it's just going to fail, no matter how great your software is. So it's very important to find a partner and provide and make sure that they provide you with aftermarket support and training for your team. So thank you very Niels for your valuable insights and input. I just want to leave us with some final thoughts. So as we wrap up the session, companies need to embrace change, as we've discussed. As we move to more frequent and detailed financial consolidation, it is a change for a company, and this can lead to more agile decision making and better financial health. Then we need to leverage good technology. So it's very important as the industry and the world changes. I think you mentioned with COVID and recessions happening, it's very important to make sure that the technology you choose can help you through this process, and you choosing the right technology to streamline what your business needs. And then definitely need to prioritize data governance and security. This is very important, like we've mentioned, not only in this industry, but it's something that companies really need to consider is data governance. And I feel like CFOs especially are now becoming data people and finance people and this people and that people. So because the financial sector of any business is so important, that data is so sensitive and needs to be protected. And then we've mentioned scenario planning and AI and the need for resilience and ability to really look into the future. This is really important for this process and in the financial space. Businesses need to be getting close to a place where they can forecast and simulate and do what ifs planning on their data. And then just in continuous improvements. The financial consolidation function is not a one-time effort, as we know. It's always changing, and regulatory requirements are always changing. And so this function needs to change with us. So thank you so much for participating in today's event. We'll go over to some questions. Let me just see in the chat. And please, if you want to reach out to us, there's our details on the screen. And we look forward to connecting with you all. There's no questions yet. So we'll wait a minute or two, but if that's all for us for today, thank you very much for attending.
I think one question popped up.
Oh, I got one question. How will the consolidation impact the market position of a new entity? Will this create a stronger competitive advantage? Would you like to answer that, Niels?
If I get that question right, for the new entity, so the new entity which is consolidated into the group, is that is how it's if that's how I understand it. I mean, you will not know, but you have to simulate it. So that's the point. So when buying a new entity, you have a certain goal in mind, of course. So for example, as we said earlier, you're looking for the intangible assets for some technology, maybe for some regions of distribution, and so on and so on. So yeah, it's totally up to your goal, what will happen, but you want to know the outcome. So, for example, if you're buying a new entity which gets you some knowledge, so some intangible assets, then you might want to know if that is more efficient than developing that knowledge yourself. So you would basically have to do two analyses. The first one would be just go with your regular forecast or budget, including this new entity, and then you have the technology. Or on the other hand, leave that entity out and yeah, plan for how much will it cost you to get that technology. And in the end, then you just compare. But that, of course, takes some time. But will it be a competitive advantage to buy that entity or not? That's the question of the outcome, or that's the outcome of that simulation in the end.
Also, to add to that, I think a big thing is to see the impact on cash flow. I mean, that's where ultimately we want to be. So you have to simulate, or you have to do what if scenarios to see the purchase of this company, if it's even viable on your cash flow. And
Exactly.
when we talk about the financial consolidation process, it's consolidating your income statement, balance sheet, and your cash flow statement. The three financial reports, and yeah, what does it look like at the end? So yeah, thanks, Niels. Another question: have you seen any trends or more customers asking for audit trails and access control? Absolutely, yeah.
Yeah,
Everybody.
these are just like basic questions that you will be asked every time, or prospect also nowadays just assume that something like that is there. So in the end, you're not talking about an audit trail or not, but just like how does it look like, and same with the access control. Everybody expect that some access control is there. The question is just how detailed it is and how can it be sliced. Yeah,
Exactly.
but yeah, also with regards for at least the DACH market, so Germany, Austria, and Switzerland, you need to be audit proofed. So there are some certificates, for example, this CP is certificated as EDW PS880, I think that's the name. So that just tells the auditor that this solution is audit proof. So that's just like a basic necessity.
Mm-hmm. Sure. Yeah, that's really important. Any further questions? We have 5 more minutes and then we will close.
No, no one is writing.
Yeah.
Then we call it a day.
Yeah, thank you, everybody. Really appreciate your time, and we look forward to discussing further on email. Have a lovely day. Thank you, everybody. Thanks,
Okay.
Niels. Appreciate it.
Bye bye.
Bye.